This is John Persinos, Editorial Director of Investing Daily. Welcome to my presentation for Monday, November 22nd. To see our full range of publications and trading services, visit our website at investingdaily.com. Also visit the website of our subsidiary, streetauthority.com. Well, the national ritual of frantic sales on the day after Thanksgiving will soon commence. It's called Black Friday, and projections are optimistic. Online sales, especially for Cyber Monday, are where the greatest growth resides, and they're projected to outpace in-store sales. Research firm Adobe Analytics expects U.S. holiday sales online to hit $207 billion from November 1 to December 31 for a new record. Take a look at this chart. Adobe predicts that online Black Friday sales, combined Black Friday and Thanksgiving spending, will grow about 20% year over year and reach $17 billion. These numbers are crucial to the American economy. About 3/4 of U.S. gross domestic product is made up of consumer spending, and in turn, about 3/4 of consumer spending occurs during the holidays. And of course, the traditional start to the seasonal spending madness is Black Friday, the day after Thanksgiving. Retailing enters Thanksgiving week with accelerating momentum. The U.S. Census Bureau reported last Tuesday that retail sales rose 1.7% on a monthly basis in October, marking the largest gain since March. Take a look at the following chart. By comparison, September saw only an 0.8% increase. October's retail sales number reflected the third consecutive monthly gain and surpassed consensus expectations of a 1.4% gain. On a year-over-year basis, retail sales rose 16.3% versus October 2020. Most impressively, sales were 21.4% higher than they were in October 2019 before the outbreak of the pandemic. Consensus expectations for Black Friday retail sales this year are high. At the same time that retail sales are surging, unemployment is falling, COVID infections are waning, economic growth is on track, and corporate earnings are robust. The key numbers for third quarter 2021 corporate operating results paint an optimistic story. The S&P 500 has reported a blended year-over-year earnings growth rate of 39%, the third highest year-over-year growth since the second quarter of 2010. All 11 S&P 500 sectors are reporting year-over-year earnings growth. The top-performing sector is materials, coming in with a year-over-year earnings growth rate of 90%. More S&P 500 companies are beating earnings estimates for the third quarter than average and beating those estimates by a wider margin than average. So far, 82% of S&P 500 companies are beating estimates, the fourth highest percentage since research firm FactSet started tracking this metric in 2008. Stocks last week held their own despite inflation fears. Take a look at the table. The dark undercurrent is, of course, inflation. Investors are increasingly worried that hot inflation will stick around and not fade, hence the slowing momentum of the stock market rally and the recent uptick in the CBOE Volatility Index, the VIX. But stock returns tend to hold up well in inflationary environments and can outperform when inflation comes down. Take a look at this chart. I know it's becoming unfashionable among economics, but I still belong to the transitory school of inflation watchers. Rising inflation right now is largely the result of supply chain bottlenecks generated by increasing consumer demand. But keep in mind, demand has disproportionately derived from durable goods, e.g. kitchen appliances, home exercise equipment, and computer gear. See this chart. This spike in demand for durable goods has placed enormous burdens on our transportation systems, especially seaports, causing a surge in prices for products that normally fall as technological innovation advances. The upshot? The pandemic-induced skew in demand toward durable goods that require physical transport is fueling current inflation, not excessive spending as the inflation hawks claim. These anomalies should eventually get ironed out. I expect the bull market to continue into 2022. In the meantime, are you looking to profit from the current wave of bullishness but with reduced risk? That's where my colleague Jim Fink comes in. As chief investment strategist of the trading service Velocity Trader, Jim Fink has devised trading methodologies that reap market-beating gains regardless of economic ups and downs. Jim has put together a new presentation that shows smart investors how to make massive investment gains in a short amount of time. Visit this website for instant and free access. Well, that's it for today. Thanks for watching and have a great Thanksgiving with your loved ones.